How's it going, investors? Ari Gutman here with the TipRanks team, and what a segment we have in store for you today as we're going to be breaking down 3 dividend stocks that are currently sitting at their 52-week low range, and even more excitingly, all are rated as strong buys from top analysts across TipRanks. Now please bear in mind that this video is merely to show you through the TipRanks platform, so if any of these stocks do in fact strike your interest, always remember to perform your own due diligence. Now with that out of the way, let's dive right in. So before I go any further in breaking down these 3 stocks, I want to share what just happened in the market and make quite the case for the value or dividend investors out there. Now this past Friday, Federal Reserve Chairman Jerome Powell spoke out at the Jackson Hole Economic Symposium. That's one of the largest economic conferences that's given throughout the year. He remarked that the Federal Reserve was of course strongly committed to fighting inflation. Now that news is nothing new, but he proceeded to then share that we could see higher interest rates for an extended period of time if inflation does not in fact come down. The market responded essentially by letting up on all the recent momentum with all major indexes losing their steam. Now, of course, as an investor, it's simply my job to minimize as much risk of losing money. That's pretty obvious, but this all leads me now to the safer investments that are out there during these heightened times of economic uncertainty with these 3 stocks that I'm about to mention, that of course analysts are not only sharing as strong buys, but they're at their 52-week lows. So can I get a drum roll please for our first stock is Sallie Mae Corporation, which was originally founded in 1973 and initially served as a government entity dealing with federal education loans. Now after Sallie Mae eventually went private, to which it remains so today, it has grown to become one of the most popular education loan providers within the United States. The stock itself, however, is down on the year by roughly 23.66%, sitting at $14.84, which all makes sense if we take into consideration that student loan repayments have been frozen for some time now, and with Biden's recent announcement of student loan forgiveness, Sallie Mae is certainly under pressure. Now their PE ratio is currently sitting at just 4.9. That's in line with some of its competitors, but on the lower side. Yet here we are with things getting very interesting. Hedge funds have been reducing their position with Sallie Mae over 6 million shares worth. But if we scroll down, we can see the biggest name on the street, Ray Dalio, actually just invested over $9 million into this stock. As for analysts, they are forecasting growth, with Sallie Mae coming back up to $20.25 per share. Now scrolling down, we can see that these 4 to 5 star analysts are also with some pretty prominent firms like Jefferies, Barclays, and JP Morgan. Now of course, we're not talking about an overnight comeback, but shareholders will be able to reap the benefits of this dividend investment, with Sallie Mae's dividend coming in at 2.42%. Moving on to our second dividend stock, we're going to remain in somewhat of the financial arena by breaking down SSNC Technologies, which is a software company that was founded in 1986 and focuses on the automation in regards to investment portfolio accounting for investment management firms. Now as of this moment, the stock is trading at $57.16, which is down from over $80 per share at the onset of the year, making for roughly a 30% difference. Their current PE ratio is at 21.22, which is considerably lower than similar stocks from Visa to FirstServe. Now, while the insiders have been selling shares over the last few months, hedge funds have in fact been doing exactly the opposite, with over 5 million shares scooped up over the last quarter. Top analysts are projecting growth as well for SSNC, rising to a share price of $74 per share. Now, until it reaches the heights of such projections, shareholders of SSNC will collect on their dividend, with a current dividend yield coming in at 1.33%. And finally, as for our last stock, Baxter International, it's a healthcare company that was founded in 1931 and is primarily focused on products to treat kidney disease and other chronic and acute medical conditions. As for Baxter International's current share price, it is down on the year by 33.72%, where it was once trading for upwards of $86 per share, but now trades for $57.17 per share. Hedge funds over the last quarter have in fact been selling out of the position, dumping at 3.5 million shares of it. But perhaps that just creates an opportunity for the retail investor out there. After all, top 4 to 5 star analysts across TipRanks are forecasting upside, with the stock shooting up to $69.57 per share. If we scroll down, we can see buy after buy after buy position from analysts. Clicking over to Crowd Wisdom, we can also see that investors utilizing TipRanks are actually favoring the stock by increasing their positions with it as well. Now, of course, Baxter International would not have made the list today if it was not a dividend investment. So with that being said, shareholders of this stock will also be receiving that dividend, with their current dividend yield coming in at 1.88%. Now, investors, that is all we have for you today. Please remember that today's video was not intended to be stock advice. So I once again would like to take this moment to share with you that if any of these stocks piqued your interest or caught your attention, just be sure to jump right onto TipRanks to begin all your due diligence before making any major investment decisions. However, I would certainly love to know your thoughts on these stocks, so be sure to drop a comment or two down below. Now, until next time, thank you for tuning in.